Good morning viewers, good morning Vidhyalakshmi YouTube channel. I am Venugopal, Department of Commerce and Accountancy HOD. So my dear viewers, today we are going to discuss very important the chapter. The chapter name is Reserve Bank of India, RBI in short form. We will use the word RBI, Reserve Bank of India. What is mean by Reserve Bank of India? What are the definitions are there? What are the types? What are the functions are there? Today we are going to discuss in this chapter. So bank, it is a main role in our financial business point of view. So you know the commerce. So what is mean by commerce? Trade and trade aids. So in this trade aids, the financial point of view. Without money, no one can run the business. Without money, no one can run the family. Without money, we can't do anything. So money is very important role in our human life. So in that point of view, the money exchanging, borrowing, lending, depositing, dealing with bank. So all the banks, they are having one head banks there. That head bank's name is Bankers Bank or Central Bank of India or the name of Reserve Bank of India. So Reserve Bank of India generally we call Bankers Bank, Central Bank of India or Reserve Bank of India. So we are going to discuss in this topics in this chapter the Reserve Bank of India, introduction, meaning, definition, functions of Reserve Bank of India. We will see one by one. Okay. Now we will see the first one, the introduction, banking service. Why we need banking service is very important. So here the banking service mainly it is a nervous system. So bank service is a nerve center of the industry and commerce into country. Not only industry and commerce, the human being also, the money is very important role. So in that point of view, in our business point of view, industry commerce point of view, so bank is a nerve system in our service. So every nation has one central bank is there. Every nation one central, every country they are having one national bank is there, Apex Bank, they call Apex Bank. So the nationalized bank, it is owned by Government of India. It is owned by Government of India. A central bank is set up and it is an autonomous or quasi-autonomous. It is an autonomous or quasi-autonomous body. So stability and growth are them. The main in India called Reserve Bank of India. In our India, the national bank, the Apex Bank, the name is Reserve Bank of India. Now we will see the next, the historical development of Reserve Bank of India. So what are the historical developments there? So first one, in our India, we started the historical data. The bank start from the Bank of Hindustan was the first bank in India established in 1770. So 1770 we started for establish the first bank in our India. In 1770 was closed on 1932. So it is a privatized bank. So the development of bank, how they developed in our India, the first was started, the name, the bank name is Hindustan. The first they established in 1770 was closed on 1930. Then next we will move on the next, the name of the central, that means General Bank of India was established in 1786. 1786 we established the other name for the General Bank of India. After that we changed the name of Bank of Calcutta was the first joint stock bank. It is a joint stock bank. So what is mean by joint stock bank? Group of private peoples or group of shareholder joined together, they start the business in the Calcutta in 1806. 18,806 they started the Calcutta, the name is Joint Stock Bank. So group of shareholder invest money, they run the banking system. After that we move on, Bank of Bengal 1809 they introduced, Bank of Bombay 1840, then Bank of Madras 1843. In these three banks, so Bank of Bengal, Bank of Bombay, Bank of Madras, these three combined together, these were are called presidential bank. Presidential bank means the main important role for this function of the three bank, they combined together, merged together, the names generally we call Presidential Bank Amalgamation Act started in 1921. After the independence 1947, an act was passed the parliament. Then after that 1947 independence, there is a bank, the Independence Act, they passed the parliament, the imperial bank. Overall throughout India, they started one bank. The bank name is Imperial Bank of India by government of and SBI. So, government of India and SBI came in the name of 1955. Came in the name of SBI. Sorry, it came in the name of 1st July 1995. The bank name is SBI. SBI, the full form of State Bank of India. This is the main historical development banks in our India. So, in our India, how they started the bank introduction, we will discuss now the history for the bank. Next, we will move on the next heading, the definition of bank. How we call bank? What is the main definition for bank? So, according Banking Regulation Act 1949, banking means accepting the purpose of lending or investment, accepting the purpose of lending or investment of deposit. So, if we need lending, if we ready to invest the deposit money from the public, so they are doing the two work, then borrowing money. So, depositing money, invest money, the customers they are ready to invest money in the bank, and the same way the bank customers also they want to loan in these two purpose, lending money, depositing money, lending money, depositing money purpose. So, repayable on demand, repayable on demand. The particular depositor is asking repayable money on his demand, otherwise unwithdrawable. If you need money, withdrawable or use in check, draft, pay order, otherwise whatever it is. It is mean by bank. So, what is mean by bank? Bank mean accepting the purpose of lending or investment money, deposit, accepting the purpose of lending, investment of deposit of money from the public, that is the main. So, repayable on demand, otherwise the withdrawal by check, draft or pay order, otherwise. It is mean by definition of banking. Next, origin of bank. Origin of RBI. So, Reserve Bank of India, where start from? Which year they start from? Then how the previous we can use the name of formulation, everything we take from where. So, 1926, in 1926 Hilton Young Commission, 1926 Hilton Young Commission, the Royal Commission, the both commission Indian currency and finance made recommendation create the central bank. So, we can floating money purpose, currency note purpose, we created one head office. The head office is mainly centralized, they formulated, they given by the two committee. The committee name is Hilton Young Commission and Royal Commission. They give how to make the currency in our finance purpose recommendation to create the central bank. So, as a result the RBI Act 1934 was passed. So, as these two commission recommendation in Government of India the result passed, RBI Act was passed 1934 and RBI launched its operation from 1st April 1935 to start from Reserve Bank of India. So, after independence the Government of India passed Reserve Bank of India Act 1948 and took over RBI after paying the appropriate compensation to the private shareholder. From the January 1st 1949, Reserve Bank of India the functions as the government owned Central Bank of India. So, Reserve Bank of India is also called Central Bank of India or Bankers Bank. Next we will move on the next heading, the symbol. See, this is the emblem of Reserve Bank of India. This is the emblem of Reserve Bank of India. So, head office, so organization structure, how they started the Reserve Bank of India, the head office in Mumbai, then central office has 33 departments are there, zonal office 4 places are there in our India, the places are Mumbai, Delhi, Calcutta and Chennai. In these 4 places the Reserve Bank of India zonal offices are there. In this 4, after that the remaining 19 departments the regional office 19, sub office 11. So, Chennai functional under the local board, the deputy governors as their heads. So, the governor, the deputy governor, the heads run their Reserve Bank of India in central of the director. So, here totally 21 board members are there. In our Reserve Bank of India, how many directors there have been? 21 board members are there. They are appointed by the government of India. They are not a private. They are appointed by the government of India. It consists how they are planned means 1 governor and 4 deputy governor. 1 governor and 4 deputy governor appointed for a period of 4 years. After that 10 directors from the various field. So, here what is mean by various field? Various field take economics, commerce, politician, econometrics, law. Based on the field they appointed the different types of director. 2 government officials, the government officials also there. 4 directors, 1 each from local board. So, local board which state is there, which district, based on that the state wise 1 local boards members also there. So, this is the structure for our 21 board of directors structure. Next, the functions of RBI. Mainly the functions of RBI, 3 headings are there. First one, leadership and supervisory function. First one, leadership. He is the leader. So, it is the leader. Reserve Bank of India is the leader. He is the supervisory body. It is the supervisory body. It is the controlling. It is a functioning in throughout India. Then traditional function, promotional function. 3 categories are there. First one based on leadership, supervisory. Second one traditional function, and third one promotional function. We will see one by one. Then leadership and supervisory function. India is a representative in the World Financial Institution. India representative in WFI, World Financial Institution. The RBI represent GOI, Government of India. GOI means Government of India. So, RBI represent the Government of India in IBRD, Industrial Bank Reconstruction Development. Industrial Bank Reconstruction Development, that is the full form of IBRD, and after IMF, IMF International Monetary Fund. IF means International Monetary Fund, which is a member since December 27, 1945 up to the leader and supervisory body. After that, the regular supervisory in India banking system, the guidelines for all banking operation in the country formulated by RBI. So, in our throughout commercial bank, cooperative bank, nationalized bank, then after the private sector bank, so land development bank, all the banks, supervisory body, the main only the Reserve Bank of India. So, it has the power to issue. What are the duties? The main, they give the issue, the license to all the banks. So, anyone private sector, public sector or anyone sector, they start the bank mean first get the license from Reserve Bank of India. That particular bank then control and supervise the commercial bank under the Reserve Bank Act 1934 and Banking Regulation Act 1949. The Reserve Bank of India, they deal with the leadership and supervisory function. Right. Next, we will move on the second heading. Third heading, monetary authority. What is mean by monetary authority? The RBI maintain the monetary policy, money value policy. Monetary means nothing but money. So, money value policy, the country in order to price stability. So, every 3 months once, the Reserve Bank of India issue, every 3 months once, the Reserve Bank of India issue the price stability. So, how we will fix the price? The increasing inflation, deflation based on that. That is the inflationary trends and economic growth. That depends upon the circulation for the share market, depends upon the circulation for the money value and sales value, everything based on that, the inflationary trend, economic growth decided by Reserve Bank of India. And last one, closely monitoring economic parameter. So, Reserve Bank of India always closely monitoring the economic parameter, the employment level, price level, production level, trade cycle of BOP. BOP means balance of payment. BOP means balance of payment and financial market closely monitored by Reserve Bank of India. Because Reserve Bank of India, the banker's bank, he only watchword, it is only watchword in all areas, not only in financial. The watchword of the employment, production, price level and BOP level and financial market monitored by Reserve Bank of India. Then next, promptly responding to new challenges. Promptly responding to new challenges. So, Reserve Bank of India always ready to challenge what are the new changes are there. They are accepting, they are following, they give the guidance and given to all the commercial bank, public sector bank, private sector bank and nationalized bank. So, whenever the challenges arose before the Indian banking system, RBI promptly attend them and issuing the master circular by organizing throughout India. They send the committee, send the analyst, the review, strengthen in banking system throughout the users in our responsible items. It is a duty, it is head duty for the Reserve Bank of India. They are ready to face the challenge and ready to modify the circulated sent to all throughout India, all the banks. Next, traditional function. So, now we are finished the first heading of leadership supervisory body. Next, we will move on traditional function. So, traditional means the banker and financial advisor to the government. So, banker and financial advisor. So, banker they are dealing with the lending money and depositing money. They give the advising part to the government. So, how is going on in our Indian government? So, based on that, when we will increase the value for the interest rate, when we decrease the value for repo rate, everything discussed with these the traditional function. So, Reserve Bank of India accept money into the central and state government. So, accepting money into the central and state government accounts, make payment on their behalf of the managed governments. So, debts and responsible for issue the loan. So, based on the debt, based on the responsible, they issue the loan in lending money or investing money for the depositor point of view, dealing with the traditional function. The first one, bankers and financial advisor to the government. Second one, monopoly of note issue. So, monopoly of note issue means the Reserve Bank of India only sole authority for the printing and issue of currency notes, except 1 rupee note, except 1 rupee note, because 1 rupee note signed by the president, then other than the finance commissioner, other than 1 rupee note and other coins issued by the Ministry of Finance. So, this is the monopoly dealing with the banks. And third one, the bankers bank. So, how we call the bankers bank? So, RBI maintain the current account of all commercial banks in the country, not only commercial bank. In other bank, we take the development bank, industrial bank and other banks also against the approval security. So, that is why the Reserve Bank of India is also called central bank or bankers bank. Next, we will move on the fourth one, the controller of credit and liquidity. Whenever the credit rating increase, controlling the interest. Whenever the interest rate is move on, all the inflation or money values are there, that time the credit rate they are giving too much and control the point of view, the rate will be increased or decreased, and the liquidity point of view, the credit money they circulate by the interest country throughout the India, controlled by Reserve Bank of India. And next one, the quantitative methods of credit control. Quantitative. So, the method influence the total volume for the credit. So, total volume of the credit means here throughout India, the commercial bank, national sector, private sector, public sector and cooperative banks, the NABARD, all the banks, the quantitative, the general methods, then collecting money volume based on that fixed interest for the credit facilities to the government. Then here the bank rate policy. So, the bank rate policy means generally the bank rate policy decided by the Reserve Bank of India. So, based on the money fluctuation in our India, inflation, deflation, based on that the bank give the instruction to the commercial bank, the interest rate will be increase and decrease based on 3 months one, the Reserve Bank of India issue the statement. So, based on the financial statement 3 months once, the commercial bank they are following the Reserve Bank of India procedures and follow everything. Then after cash reserve ratio, shortly CRR. So, cash reserve ratio means all the compulsory, all the commercial bank minimum this much of amount compulsorily deposit to the Reserve Bank of India. For example, if you take 100 rupees mean 40%, 40 rupees compulsory deposited, compulsory reserve in our Reserve Bank of India point of view. So, all the banks that you take, for example, 1000 rupees if they are deposited, mean 960 goes to the deposited money for the commercial bank, remaining 40 rupees transferred to Reserve Bank of India, because they also run the business. They also run the business, floating money, collecting. How they collect? Because the reserve, cash reserve is very, very important. So, in that point of view, the cash reserve controlled by Reserve Bank of India. The next, statutory liquidity ratio. What is mean by SLR? Statutory liquidity ratio, it is a very, very important role, because the 1000 rupees deposited money in our commercial banks mean the commercial bank keep their 800 rupees, remaining 200 transferred to the statutory liquidity ratio point of transferred to Reserve Bank of India. They will reserve money whenever the commercial bank they comes to close or comes to last position, that time in these reserve money transferred to that particular commercial bank's point of view, the Reserve Bank of India collecting in this SLR amount and CRR amount. The next one, open market operation. What is mean by open market? Here, Khrushchev economy control inflation. The central bank, the commercial banks, they are dealing with the individual companies by fluctuating money, central bank to commercial bank operation. Then after, qualitative credit control measure. What is mean by qualitative? The ratio of the credit. So, ratioing of the credit means here mainly the central banks is the fixed limit to the credit facilities to the commercial bank. So, every year 3 months once take the financial statement, you can stop this much of credit facilities enough to issue to the customers. Do not give too much. If you give the too much means they will not control, they will not repay the money. So, we will get too much of loss. So, in this controlled, the credit controlled measure, the statement, circular and following the rules and regulation given by Reserve Bank of India. And next one, marginal requirements. Marginal requirements means the requirements given by Reserve Bank of India, everyone they have to follow. If they 1 lakh rupees, $2,000, 10,000 rupees, $200, 1,000 rupees, $20, we fix 2% minimum the market requirement, marginal requirement depositor to transfer money to Reserve Bank of India. Then after next one, they come to the last two headings of direct action and moral cession. What is mean by direct action? So, direct action mean, so Reserve Bank of India is a supervisory body, he is a controlling body, he only send all the circular to the all the nationalized bank, commercial bank and industrial bank. So, refuse rediscounting the bill of commercial bank. So, commercial bank you give the any rediscounting mean they won't accept Reserve Bank of India if they allow the discounting is possible, otherwise it is not possible. Then after to refuse loan. So, the commercial bank they are ready to issue the customer 1 crore rupees, they are ready to issue the credit facilities mean the Reserve Bank of India if they allow, they issue the loan. Otherwise, if the Reserve Bank of India refuse, it is not possible to issue loan to the customers. And next one, to impose monetary penalties. So, how the commercial banks is going on the business. So, based on the commercial lending and borrowing loan money point of view, the imposed monetary penalties, if you pay this much of money every month transfer money to Reserve Bank of India, if they not pay the particular date, settle the amount means what will happen automatically, give the penalty, so pay the amount the commercial bank to Central Bank of India, that means Reserve Bank of India after the condition of rediscounting. So, the rediscounting possibilities are there if they allow the Reserve Bank of India, we can allow that rule. So, disallow the bankers conduct banking business service. So, banking service disallow. So, bank conduct it is very, very important. They always supervisory body in our Reserve Bank of India control take the direct action with the commercial bank, industrial bank, other bank also. Come to the last fourth session, the name is moral cession. Moral cession mean it is a main moral cession for our Reserve Bank of India act of persuasion. We will give a persuasion point of view. The central bank they give the direction how to run the business, how to get the deposit money, how to give the benefits to the commercial customers point of view. Then monetary policy how to maintain the inflation deflation period. Then seeks the cooperation with the commercial bank and Reserve Bank of India, how to involve the personal intention, personal interaction with the commercial bank and Reserve Bank of India. Then after the qualitative tool, what are the qualitative tool you have to follow? You have to maintain, give the instruction to the commercial banks, then the psychological impact. So, psychological impact if any effects are there, any one commercial bank safer side then take the hand to the Reserve Bank of India, they will give help to the psychological treatment and give the help to the commercial bank come to the upgrade point of view. So, my dear viewers, today we started the new chapter, the chapter it is 11th subject commerce, the chapter name is Reserve Bank of India. Today we are discuss the meaning of Reserve Bank of India, then after the definition of Reserve Bank of India, the functions of Reserve Bank of India, these are all the topics today we are discuss. So, remaining topics we will discuss in the next session. If you like, share the video and link then put video, then thank you very much.